Hello everyone and welcome back to the eToro sofa. My name is Jessie, I'm the UK crypto correspondent at Hardfork with TheNextWeb, and I'm delighted to be joined today by JeppeKirkBonde, who is a popular trader on eToro. Is that correct?
That's correct. Yes, that's correct.
So, popular investor, that is your title. So tell me, first of all, how did you get into investing in the first place?
Yes, so I used to work as a management consultant advising banks and did a lot of valuations to calculate what companies were worth. And then I started making some money and I wanted to invest my money. So I looked at different platforms and I compared them and I decided to start investing on eToro. And that was back in 2013. Then my investments continued to do very, very well. My average annual return today over that 6-year period is 35%. And because of that, more and more people started copying me. And then eventually so many people were copying me that I was making more money from my investments on eToro than my job as a consultant. And then I just decided to focus only on my investments.
So you mentioned that you've been using the eToro platform since 2013. What made you decide to choose eToro in the first place? Or were you doing that alongside other stuff at the time?
I did an analysis, as I always do. I took out my good old Excel model, then I put in the different ones that I were considering. In the end, it came down to 3 platforms: Interactive Brokers, Saxo Bank, and eToro. Then I looked at the portfolio I wanted to make, what would be the fees, but I also scored them on how much do I like the mobile app, how much do I like the website, how much do I believe in this company, and then based on all that, eToro came out as the best platform. And I've been very happy with that since, because when you pick a platform, it's not only how is it today, it's also how is it developing over time. If you pick one, but they keep increasing the price or they don't give you the latest features, you're not as happy. But here you have eToro that's just reduced the price of my most traded asset stocks to 0%. And they keep making the app better, keep making the website better. That makes you feel happy about the platform you picked.
So you've been investing for about 6 years in total now on the eToro platform. Tell me a little bit about your portfolio and what it looks like and what you tend to invest in and why.
Yeah, so more than 90% of my assets are in stocks. Now, in general, you can invest in property, that's good, stocks is good. My eToro portfolio is my stock portfolio primarily. And while it's nice, I like to have some geographical diversification, be diversified across different industries and different stages in the value chain. But I'm not exactly replicating if you look at how the world is geographically, GDP-wise, I mimic that a little bit, but I have slightly more US stocks and I have slightly less Chinese stocks, for instance. And similarly, I have slightly more tech. Now that used to seem strange, but now as more and more industries are becoming tech, and you look at, even the banking sector now, you start calling it fintech more and more. So then that's sort of, I feel quite comfortable with that. But then with diversification, if you have only one stock at all, that's probably going to be the very best stock, the one you picked that you really, really believed in, but then you get no diversification. If you have 1,000 stocks, you're getting a lot of diversification, but also a lot of things that might not be the best ones. So you sort of find a balance in there between getting the cheap benefit of diversification with actually picking the assets that you truly believe can grow.
And for someone like me who's never invested in stocks, I'm just curious to know what your strategy is like. So what do you look for in a prospective investment before investing?
So I sort of start both from the bottom and the top. So from the top, I start by looking at the whole global economy. It's 800 years of history of financial data and so forth to see what do I really think about the macro environment of the world, which industries are growing, which countries are growing, is the whole world growing. Then within that, there are different industries in different countries that I relatively more believe in. And within that, there are then specific companies that I pick up on. But quite often, the specific stocks I get are also based on tips from people. So I get an idea that this if Apple's growing a lot, I might look, who are their suppliers? And then I might find a company that like wow, this truly seems amazing. But then there's a lot of analysis on top of the individual companies. So you have a company that you think is going to have a great future, but how is it priced today? So I look at, how much are their revenues growing? Is it growing just because they're acquiring other companies? Are they truly selling more products, making better products? You can talk at this conference. It's a great place to meet some of the employees, so you can just go over and have some of your hypothesis confirmed or disproven? Like, isn't it like this in your company? Like, and then they're like, yeah, you're right. And then you're like, okay, that's what I thought. But you have to sort of read all the information that you can get there, and then read between the lines, because a lot of times, they say it, but you have to know why they are saying it that way, and sort of, not all profits are created the same. So then if you have some industry insights or something, you can sort of know, like, yeah, but when they say the profit is that high, it's including a lot of things that you wouldn't necessarily consider in the same way. So yeah, there's a lot of things that go into picking that. But if you're only looking at, you can't do that level of analysis, one person of a million companies, but you don't need to. If you can pick up 10 to 20 great investments over a long time period, that's going to give you a diversified portfolio with great returns.
So actually, using this conference as a little bit of a research trip, are there any particular companies that you've seen or spoken to that have caught your eye over the last couple of days?
Well, there's one that I've been looking at for a long time. I think it's a great company called Zendesk. It's I'm from Denmark. I live in London, but they have their management is Danish, and they are based in California now. And their product is just absolutely incredible, and their stock price is also high. So you sort of get that. But that's one of the things. It's still on my radar. I'm not gonna invest because I think the stock price is too high. But I don't want to sort of lose sight of them. If their stock suddenly drops a lot, I want to be able to sort of not suddenly then have to go out and, I need to talk to some. No, then I want to sort of like be prepared that, all right, I know what I need to sort of. The stock drops, I need to know a couple of things, and then I can feel ready for that. So yeah, that was one example.
And is there any truth in saying, for example, like invest in what you know? So are there any companies or industries that you stay away from completely? And if so, for what reasons?
If the overall case seemed good enough, there's nothing I would stay entirely away from. But either I need to know it really well personally, or I need to know someone who knows it really well personally. So with something that's very, very scientific, for instance, there's just no way that I can really try, and I can spend a long time trying to read about it, but at the end of the day, I'm just not gonna get it perfectly. And there, a long time ago, for instance, one of my good friends was doing a PhD at Oxford University about genetics, so he became like my, right, and then he could tell me like, yeah, but what you're not understanding here is, yeah, but what you're misunderstanding here is this. So then, and then based on the trust, him like, right, okay, this is the one I want to invest in then. But I wouldn't myself have been able to pick up research papers and go like, right, now I get it, and that would be impossible.
And in terms of like, obviously, hindsight is a beautiful thing, right? Have you had any moments where you've missed out and just thought, oh, I so wish I could have, bought that earlier, or missed out on a potential opportunity that you, to this day, like you still remember?
I would have liked to buy Beyond Meat right at the get-go when that one grew a lot. And I think, my biggest regrets are sort of always the ones that I almost invested in but didn't. Because at the end of the day, you only have this amount of capital. If you're going to invest in something, there's something else you're not investing in. And so those are always the worst ones where it was so borderline, you and then you didn't do that one, and then that one went really well. So that Zendesk was one example that they did really well for some time. But then you have others that did really well as well. So you sort of... But yeah, there's definitely, if I invest in something and it goes badly, I often know why, and I can see, was my hypothesis wrong, or did they just, did that company have every opportunity? They had a great market, a great position, and they just threw it away. Yeah. That can happen. Any company can have a lead and just drop the ball. But you did it and you know it. But if it came really close, then it can be painful.
So I know there's a lot of research and analysis and data that goes into everything that you do, but do you ever just go on gut instinct? And if so, like, how much of that do you allow yourself to do?
No, I would not say that. There can be a little bit of gut on maybe the specific timing of something. If it's sort of, if I have it all in place and I want to sell this now, I want to buy. I think the gut feeling could be what determines whether I do it now or I wait a day. So I'm like, let me just sleep on it and let me just reevaluate tomorrow, and then I'll. Or other times maybe it's the gut that makes you a little bit more confident. You go like, right, I've done I know what I want to do, and I'm just gonna do it now. So that could, but it's not gonna be like I think I spent too much time in the sort of in the non-gut part of the brain to really ensure that I have put everything into my Excel files and IT systems, and really feel confident that I have looked at everything, that there's not something out there that I'm missing, and that there's not, that I can compare it with the right things. And then you sort of, I would say, I turn off the gut. I live my life a lot like that. Like, I tell my to-do list what I want me to do, and then I do what's on my to-do list instead of sort of telling myself what I need to do. So that sort of works well, to just say like, right, write down what's best and then do what's written down. And then you sort of, I think that's actually a way to sort of get away from that whole, because you wouldn't want to make a decision based on you being hungry or not hungry, or being agitated or not agitated. I think that would be unless you have a really good gut, but.
I mean, they do say never go to the supermarket on an empty stomach, right? So I guess it kind of applies here a little bit. So similarly to me, you're based in London as well, and clearly markets are so dependent, or relatively dependent, on like socio-economics and politics and whatnot. And, I often feel like Brexit is a huge elephant in the room. So given your insight and where you sit within the market, do you think that the UK is impending divorce from the European Union, if it happens, and when it happens, do you think it's going to have a sizable impact in the kind of investing that you do?
I looked a little bit on if there was some Irish companies I could pick up, but I thought they were a bit overpriced as well. But there was one little idea I had based on that. Overall, I think that I forgot the consulting company now, but there was one very good report with some different scenarios for what could happen on the different. So based on where sort of you might not have a Brexit at all, you might have it. If you have it, it could be something where basically nothing happens to begin with. In sort of outsourcing, you call it lift and shift. You change the ownership or you change the structure, but you don't change anything on day one. You sort of wait and see. And if that's sort of the case, and we go over to WTO trading rules, you can see like if you imagine that some products get an 8% tariff between the UK and the EU in the worst case scenario, that's going to mean maybe some buyers will buy something different, some will just pay the price, and some companies will find a way where they go like, right, we need to then open a factory in the UK, or we need to change legally a structure, something like that. So and then you sort of cope like that. So the biggest loss in sort of the most likely bad scenarios are not so much in terms of actual bad things happening, they're more in terms of negative press, but also in wasted time of the civil service and politicians, because this from end to end will probably end up being maybe a 10-year period where many people have spent 30% of their time on this issue, where that 30% of the time could have been used on other things. So you sort of lose that political capital. Can UK then benefit outside the EU? Are there a lot of cool things they can do? I think at the end of the day, you're always going to have international relations and trade and so forth. So it's and I don't think that's going to be like sort of a big death spiral or a big room for success.
I think that makes sense. And so you've been investing for a while. Is there anything that you wish someone had told you before you set out on your journey in terms of like best advice, or something that you've picked up along the way that you think would be really useful for other people investing to know?
I would say I think I was very fortunate to start out with getting my degree in finance university. That was a good field to choose, and I think I was very, very fortunate in the consulting firm I worked that the partners took time to really teach us how to value companies, and that's the stuff I've just been using since. So I think that was just really fortunate. I think I was also I was fortunate as a consultant to be sent into many different industries and sort of be able to see what things are just the same everywhere. So you sort of learn it once, know it forever, and which things you gotta learn from scratch each time, and you just gotta accept that this is gonna be completely different each time, and you gotta learn it. So I think I was lucky to learn all those things right from the beginning, and it would have been terrible if I'd suddenly discovered those things now and been like, should have looked at profit in this way instead of that way. But maybe I'll be a revelation in a few years, and then I'll realize that there was something after all I didn't learn.
There you go. Well, thank you so much for your time, Jeppe. I've definitely learned a lot. Good luck with your investments. I hope you enjoy the conference, and hopefully, who knows, maybe see you in London.
Yes, thank you very much.
No worries.